Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from Chicago on a very chilly Thursday morning here in Chicago to start the new year. Happy New Year's, everyone. Joining me today from tropical Kansas, Director of Feed Foundations, Mr. Jay Kingsley, and returning to the Grain Feed from Michigan, you know him from the critically acclaimed and most watched show at EverAg, Tech Talk, Dairy Market Advisor, Mr. Cody Koster. Team, how are we today?
Pretty good this morning, Jim. Happy New Year.
Happy New Year. Cody, how are you?
Doing well. Thanks for having me, Jim.
Absolutely. Thanks for being on it. I hope you appreciated the Tech Talk shout out.
I did. Didn't want to make a big deal out of it, but you did for me. I appreciate it.
I think it's important I'm humble and, I face the truth. The truth is Tech Talk is the most watched show that EverAg produces. So for all the viewers and listeners at the moment, you are currently not tuning into the most popular show at EverAg. If you do not already watch or listen to Tech Talk, we strongly recommend that you do so. Cody usually co-hosts with Mr. Andy Fallman, correct?
Correct.
Yeah. So for those interested in the technical analysis of any markets, they also take call-ins, write-ins, right? You want all sorts of charts.
Any way you can get a hold of us, we will take it.
Yeah. Okay. Excellent. Well, as we move forward into 2025 here, gents, any New Year's resolutions? Cody, did you have any resolutions when you woke up yesterday morning?
I didn't. Andy asked me the same thing on Tech Talk, and I don't make resolutions. You look at the numbers, usually by the third week in January, people quit their resolutions, about 85%. So I just said here I was going to try to be a nicer, better person to my colleagues.
Wow. Well, that would be wonderful.
And it's already the second, and I quit.
Jake, any resolutions for you for 2025?
My wife's the list person in this household, so I'll have to ask for her list.
Oh, sure. Yeah. Okay. Yeah. Always ask your wife for permission before creating a New Year's resolution. I do think.
Well, I never got around to creating them myself, but I know that she created a few. I don't know what they are yet.
Okay. Well, for those tuning in that made their own resolutions and did not ask their wife beforehand, you might want to go back and double check before you go forth into 2025 without that approval. Just throwing it out there. You guys want to know mine?
I was going to say, Jim, what's your resolution this year?
I've got a few. One is just be a better colleague and a better friend to those here at EverAg, especially to the hosts of shows that outperform the show that I host. I want to make sure I'm cordial and make sure it's friendly competition. There's no bitterness here. Like you said, by the third week of January, that will go away. I'll be hostile and very bitter. So
I don't even know if you made it to the third hour.
Well, that all being said, let's take a look at the markets here this morning. Paige, if you would kindly timestamp the broadcast. It is Thursday morning. It's January 2nd, 2025. Keep reminding ourselves of that. The grain markets are starting the day mostly unchanged with the exception of soybean meal, that stubborn little byproduct. But right now we're looking at the corn market. March corn is up just a tick. It's still hovering just below 460 here this morning. It's at about 459 here as we record on Thursday, first trading day of the year. We have March beans are up 3 cents. We're back over $10 on nearby beans, and March is at 10.13 with Jan just over $10 a bushel. And we have soybean meal. Like I said, that stubborn little byproduct. March meal is up another $4 this morning. It's just over $3.20 per ton as we head into the new year. So a nice little run here lately in the protein markets over the last week or so. And we'll turn to Jay Kingsley here in a little bit to check on the feed markets. But first, let's turn her over to Mr. Cody Koster. Cody, what's been happening in the dairy markets as we wrapped up 24 and move into 2025?
Well, I think, for the first day back after our holiday yesterday, markets in the green right now. We were up about 25 cents in quarter one itself, we have about 45 minutes till we get into spot cheese. And if we look at the last 3 trading sessions, essentially, usually towards the end of the year, you get to Christmas, you get to New Year's, and everything kind of slows down. We had quite the run up from Friday to Tuesday in the market, and there's been a lot of buying activity in spot cheese. People have kind of wanted a little bit more cheese going into the new year, probably for some forward sales that have gotten off, maybe going closer into quarter 2, end of quarter 1. But seasonality wise, we are in the 90th percentile. I was looking before we jumped on the show here, Jim. If you look at Jan through March right now, all months trading above $20. Almost touched $21 on Tuesday. Didn't quite get there. Fell off a little bit. But seasonality wise, for quarter 1, these are massive numbers that we usually don't see. If you look back, I think over the past, I was looking 10, 15 years, you get to a high of about $21 in January, usually fall off an average somewhere between, I was looking $17 to $15. So right now, we are moving just based off the cheese buying that is happening on spot.
Okay. And Cody, you've talked about this, I think, before we started recording the show, but cheese being that big driver at the moment. Do you have any other color commentary behind that cheese market this morning?
There's companies that are just out there on the CME buying cheese that I would say this time of year are not normally there. They've got all the buying done, and usually by the time we get to Christmas, we'll say the holiday demand is behind us. The holiday demand is behind us, right? Next thing we have is a Super Bowl. But for us to get to the end of the year and there's still being a few different companies that are out there buying as much as they have been is just fantastic. I mean, driving these prices, like I said, mid $20, almost $21. We've talked about it with different folks that us 3 have been on calls with, talking about end of the year rallies and getting ready and the possible unsustainability of those prices, whether it be grains, feeds, or milk. And we are still seeing that right now on the second day of January.
Okay. And he said that perhaps unsustainable in terms of the buying power that we've seen from some of these cheese buyers. You mentioned we're post holidays, pre Super Bowl. At this point, there's usually a little lull. What are we having our dairy producers do, seeing prices where they trade right now?
Right now, we're suggesting forward sells. I mean, if you can get in here and sell January, February, March at $20.50, like I said, it normally settles out much lower than here in quarter 1. Not to guarantee that that's going to happen this quarter, but you look back the past 10 years, I think the high in January was $21, average 15, 16, maybe $17. Because we don't have much demand until we get to the Super Bowl, and there's just a little blip of demand right there. These are just fantastic numbers. They really, truly are. So any kind of forward sales that we can get on right now, suggesting everyone get sales on as best they can.
Okay, understood. Thanks for that, Cody. And we've had just in terms of the dairy farm itself, a little bit of a cold spell hitting us here in the Midwest over the next week or so. Rightfully so. It's January. Turns out it's winter, and winter gets cold in like Illinois, Wisconsin, Michigan. So not a huge surprise, but what are you hearing from the dairy farmers out by you in Michigan? All things are okay so far weather-wise?
Yeah. Weather-wise, things are good. I mean, you've had some freezing, some thawing, some back and forth on that. Wish it would stay consistent, but Mother Nature's not going to give us that every single year. So, like you said, we do have a cold spell coming up, I think, for the next week or so. Some water cups might get frozen, maybe a few outside implements. But as far as milk production goes, everything seems to be steady Eddie, staying on course. Cows are milking, still good weather. It's not like we're negative 30 degrees with wind chill right now. So everything is par for the course at this point.
Okay, good to hear. Well, thank you, Cody. We appreciate it. Jake, let's turn her over to you regarding the feed markets. And Cody was mentioning some of the strength, we've seen on the dairy side. We've also been seeing some strength in the grain markets as of late. I think as we kick off the year, we mentioned corn was unchanged, meals up $3 or $4. Each are up fairly well, at least from the recent lows we had seen over the past couple months. Meal is now trying to push one of its better prices, really since that, September into October early rally. Corn seeing some of the best pricing for March that we had really since the summer. So Jake, what's your take on the feed markets this morning?
Yeah, I think the future side of feed pricing has certainly been exciting and running higher here the last handful of weeks now. Really only a couple weeks there on the soy meal side of that thing. But corn, of course, has been rallying for a little bit of, really that last month of 2024. But it's creating some opportunity in basis. We've been able to get quite a bit of protein basis cleaned up through September of 25. Folks had plenty of opportunity, and most of them did take advantage of it to get very inexpensive protein bought both basis and futures through September. Now there may be an opportunity, I don't know, maybe this is your realm to kind of talk to, opportunity to catch a break lower in futures sometime out forward here and cheapen up their existing purchases there. For those that haven't knocked that out yet, it feels like basis, particularly on soybean meal, is what we call biddable, meaning it's soft and could work lower if you go in and put a target in front of your vendors. I think that's just due to futures rallying and kind of slowing the purchasing pace of a lot of folks around the country. On the corn side, we've seen basis slip down towards our target areas in most markets, at least for the Jan, Feb, March window, if not the Jan to September window. So taking advantage of that, again, going in with firm bids to vendors and sticking to the numbers we've been talking about for 6 months at this point. And if they'll hit them, go ahead and fill them. There's no real good reason to adjust those lower at this point. We had a pretty good haircut to the corn balance sheet back in December. I think there's potential on Friday, January 10th's WASDE report that we could see further adjustments. That one typically is a little bit of a market mover, as it is usually the last opportunity for USDA to come in and adjust production numbers on this most recent U.S. crop. Now, they could still, over the course of the rest of the year, come in and adjust demand numbers, move some other lines around on the balance sheet. But as far as yield and acres go, those probably settle. So there could be a final adjustment there that shakes up this market a little bit in just over a week. So taking advantage of basis while it's here and trying to figure out, for those that are still exposed on corn, is this time to step in and just own futures and maybe get some puts on it in case this thing retraces back lower. At the end of the day, the South American crop still looks very healthy. Global balance sheets are relatively good. We're by no means in the tight position that we were a year, 2, 3 years ago now, but not quite as rosy as we were just a month or two ago either. So a little bit to figure out there. I think we're going to have some opportunity, but overall, these cash prices on feed are, even with the rally over the last 2 to 6 weeks, depending on the commodity, these prices are still really attractive relative to the last few years.
Yeah, I think, Jake, we're doing a lot of comparing to where the markets were trading, like in meal, maybe 2 or 3 weeks ago. Corn's been in this slightly elevated, steady, sideways trend. I would argue even a slight uptrend as you're looking at March and May, not as much as you look out into new crop for like D's 25. I think just a few weeks ago on this show, Jake, maybe a week or two before Christmas, I think we were very clear about that protein market of we're not necessarily bullish protein by any means, but trading down at those levels when we were in the 280s and 290s on nearby, I think we were adamant about, are we bullish? No, but how often does this meal market trade consistently futures-wise within that 280 to 290 range over the last 8 to 9 years? And the answer is it just doesn't. It does break down through there, and it'll trade it for a week or so. But if you look back on a long-term weekly and or monthly nearby meal pricing, we just don't spend too much time down in these levels really since 2015, 2016. So yes, have we now rallied 30, 40 bucks a ton since some of those lows? Sure. In the grand scheme of things, overall, these are still relatively cheap protein prices. 320 board pricing, higher than 285, sure. Heck of a lot better than 400, 450, and even the 500 levels we've seen over the past really year and a half to 2.5 years. So we've certainly seen a lot worse. That corn market, Jake, you brought up the WASDE report. Perhaps this is a little bit of a buy the rumor, sell the fact heading into WASDE. What time will tell here next Friday, but I think the market is concerned of a tighter balance sheet like you referenced from the December WASDE report. So if the USDA does decide to take away a little bit more from yield, maybe just a touch for that final print, and then we look at maybe they increase export demand and or ethanol by another smidgen, then yeah, you are tightening that balance sheet a bit, but we'll see. It feels like the market is already preparing for that. And then, of course, we talked about it probably way too much back in November, but we are now in January, and it is time to shift the balance of power here in the United States at the federal level. We'll have a new Congress and a new president here within the next 3 weeks. So right around when Cody is throwing away his New Year's resolution, we will have a new president here in this country. So perhaps the markets are also trying to position or reposition themselves ahead of that big day. So we will see. Certainly a lot to talk about. Gentlemen, excellent work today. Cody, thanks for returning to the grain feed.
Appreciate it.
Absolutely. Great to have your insights today. We'd also like to thank Lexi and the Everag Insights crew for their support. Thank you to Paige for production magic. And thank you to the viewers for watching the grain feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the grain feed.